Friday, January 17, 2014, current time 11:30 GMT. It's Jay Meisler with the GVI Forex Daily Market Update. I heard something yesterday on CNBC was very interesting. Dennis Cartman was being interviewed, and he was asked when the bull stock market might end. His reply was, "It'll end when it ends." They asked, "What do you mean by that?" He said, "The market will tell you when it's going to end. You'll see a high and then an attempt to take it out, but you get a lower high followed by a trend line break, and then you'll have a clue that the bull market had ended." He said, "I don't see it coming now." He suggested buying shallow dips, but the reason I mention that is if you look at the euro dollar, where we've been in a 152 pip range, and I remember when that used to be the daily range for over 2 weeks now, following that opening year gap down. And I can say the same thing. When is this range going to end? It'll end when it ends. The market will tell you when it ends, when it breaks either side of basically 135.50 to 137. In the meantime, this is the hand you're dealt. You got to be aware of tight ranges because your sentiment can swing markedly with small moves. Look how you feel when it's below 136. It feels offered. When it's above 136, it kind of has a little bit to it, and that's what it is. The euro is really not the focus. You can see how hyper focused the market is on data, especially those countries which have a greater chance of raising rates. Sterling gapped up today on retail sales. U.S. data coming out today. We have industrial production, housing starts, and University of Michigan sentiment. And markets are going to move on rate expectations, then they're going to move on data. The euro, no chance of the euro rates being cut or raised this year. At least very little chance of it, especially on the downside. No chance of a rate hike. So therefore, euro data is not having as much impact as, say, sterling, UK data, and US data. With that being said, here we are. We have the euro dollar now trapped between the 20-day and 100-day moving average. 100-day is 135.59. It's moving closer to into range by attrition more than momentum. And for today, 136 is kind of the battle line. And now you mentioned this repeatedly, when you're within a 50 and a 50, 135.50 to 136.50. That big figure, in this case 136, can have a magnetic quality to it, and that is where we've been trading, and we've settled in here. It's kind of a battle for 136, and you could take it one way if you're bearish, which it's which my leaning is that you'll get an eventually break lower, and for that to happen, you got to kind of exhaust all the demand around this 136-ish area. Now, what would change it if we go above 136.50? My view would be tempered, and above 137, that view would be negated. So you got 135.50, 136.50, and 137 on top, 135.50, really 48, and 135 on the downside. 135 should eventually have a magnetic quality to it, but first we got to break through this 136. In the meantime, we seem to be in this range market where crosses tend to have more of an influence than spot versus the dollar. I mean, that's really it for now. You've got the Aussie still weak, but flirting with 88, and dollar yen above 104, and 142 in euro yen is setting its tone. So it's a Friday. Markets are closed in the U.S. on Monday. Not a day usually for big bets, but beware of complacency because often this is when you see big moves.